Let me bring to the show Matthew Maley, Managing Director at Miller Tabak. Good morning, Matt, and thank you so much for joining us.
Great to be here. Thanks, Alex.
Matt, a lot of movements right ahead of the opening bell, and we also do see the futures slowing down kind of. But first of all, I'd like to kick off with the retail sector. It's incredible what we saw, specifically from Macy's and Walmart. This is incredible, despite the fact that, by the way, the COVID is waning, which is certainly very positive, but their full year guidance is extremely ambitious and not only extremely positive for investors. So what's your take on the data and what does it mean?
Well, it certainly shows that the the economy is reopening a lot faster than people thought, even the most bullish people. The one thing we do concern ourselves a little bit is that, of course, that we've seen in the last week or so, just more recently, obviously since these quarters ended for these companies, these retailers, we've seen consumer confidence pull back a little bit because of concerns over inflation. However, especially for somebody like Walmart, I think this is an incredibly telling number. It shows that they're obviously they're a low-end retailer, but they're one of the best in the world, and they're one of the few companies that has done an unbelievable job of competing with Amazon in online retail. So this one is just a very, very bullish. And not just for the U.S. economy, but for this stock in particular. I think Walmart has got a lot more upside from here. And Macy's is another one. It's very interesting that this is a stock that has badly underperformed for many, many years. So finally it's making a comeback. So I also think this stock is positive, but I am a little less bullish. And again, I don't want to say I'm negative. I'm certainly not negative on the stock. This is a bullish move, and it should move higher from here, even after it opened. It's already looking like it's going to open higher. But we do have to be concerned a little bit about these concerns over inflation. Will that cause some consumers to pull on their horns a little bit? It's more likely to happen at a Macy's than it is at a Walmart, where Walmart has a lot more things where people absolutely have to have.
Yeah, that's for sure. If you had to choose between Walmart and Macy's, which is your first choice? Of course, Walmart. When it comes to stocks.
Yeah, definitely Walmart. There could be more upside in Macy's in terms of over the next year or two, because the stock is down so much. But Walmart is like you're still going to get almost as much upside potential, but also with a lot more security, a lot more safety. So I have to go with the Walmart stock.
All right, this is very important. I just wanted to move very quickly to the telcos or telecommunications. Certainly, we all know which is the major story over there. Let me show you very quickly AT&T and Discovery in pre-market trading. Here we are, AT&T off about 6% in pre-market trading and Discovery off about 1.4% in pre-market trading. So let me just remind everyone what happened just a few years ago. 3 years ago, basically AT&T executives were in a federal courthouse fighting the Justice Department to defend their takeover of Time Warner, more than $80 billion foray into the entertainment business. And not only, of course, AT&T won the court battle, now at the behest of Chief Executive John Stankey, the telecom giant is giving up its dreams of marrying media content and distribution, one of the biggest about faces in corporate deal history. So what you see is this gigantic empire that they're trying to create together with Discovery. AT&T said it will spin off its sprawling media empire, including HBO, CNN, TNT, TBS, and the Warner Bros. Studio, into a new venture with Discovery. We did see pretty different reaction when it comes to markets. How do we have to interpret this major selling in the past hours right ahead of the opening bell yesterday, which are going through today's trading session, specifically in pre-market? How to interpret all of this?
Well, it's kind of interesting for both of them, because there's different reasons for the moves for AT&T compared to some of the others. I mean, AT&T initially it was a very, very strong day for the stock yesterday, early in the morning, and then it rolled over and got absolutely crushed in the afternoon. And the reason for that is, early on, people were saying, "Oh my gosh, this is great! This is going to allow AT&T to cut back on their huge debt load. They had a carrying a huge debt load and be able to pay down some of that debt, and which in turn will enable them to maintain their dividend, which is up near right near 7%. But then when they heard from the CEO as we went through the day, we realized that they're not going to spend as much money on their dividend going forward, and which people are starting to worry that now they're going to cut their dividend. So it's interesting on a technical basis. This gave the stock what's called an outside day, a higher high than the previous day, a lower low than the previous day, and a close below the previous day's low. That's usually a big warning flag. In other words, it shows that the buy side is basically done. They're worn out, and it usually returns signals a significant reversal. So that's it for AT&T, and that's why we're seeing it lower again today. The concern about one of the reasons that held this stock up for a long time was its really beefy dividend. For the other names, we have concerns about what's going to happen with regulation. Are they going to be allowed to do these things? There's also, because again, yesterday the initial feeling was that, this is going to cause certain other takeovers. They're going to be more mergers or more takeover battles that will push the whole group higher. But again, some of these regulatory issues have got people wondering that, are we really going to get a lot of this through? So there's just this whole, like you said, when you announced when you mentioned what exactly happened yesterday, this was a big surprise. They knew something was going to happen, didn't think it was going to be this much, and it created a lot of uncertainty. And when people are uncertain, they're afraid to move into that area, especially when there's so many other areas in the marketplace that seem to be doing well, like the retail sector.
Well, how do you interpret this decision? Is it because they're not good enough when it comes to competition by themselves, of course? Then we saw that they're trying to create a major empire. They're going to spend about $20 billion on content. Netflix alone is, I guess, spending about 17 to 18 billion on content. I said Netflix alone. So what is it about, in your opinion? I mean, is this a strategic step, and do you think it's a good one?
Well, I mean, the thing is, when the other thing, of course, is when you have a new player coming in and spending a real lot of money on content. Well, that means, guess what? Netflix is going to have to spend even more on content. Disney is going to have to spend even more on content. They've already been spending a lot of money, obviously, and if the more they spend, if they really have to jack it up, that's going to cut into their profits. I mean, there's only so much they can make at the other end, and so this competition for content, boy, that's great if you're a content provider because you're going to make a lot more money. But for those who are spending that money, that raises your costs, that lowers your earnings, and that's part of that competition for the best content. It raises cost and hurts your earnings, and so that's another reason for why people are a little bit not so certain that this is the best move in the world for this group.
Yeah, that's for sure. Not only, I was wondering, do you think they actually eventually can compete with Netflix and Disney? Because how can I say, Netflix is the leader in the ambient, in the streaming war, if we can call it like that, in the past 10 years, I guess, or a little less.
Whether they can or not, I mean, I guess my answer is yes, but it doesn't really matter because they're going to try. And the fact that they're going to try means, again, that they're going to spend a lot more money doing it. And it's kind of like an arms race that if, oh my gosh, Netflix is like, well, if these guys are going to do it and Disney's already doing it, we have more competition. How are we going to remain the best? We've got to spend more money on content. That breaks in, again, that cuts into your earnings. So, and like I was saying, is that there's a lot of other areas in the marketplace, like the energy sector now that's suddenly doing so well. And it's like, do I really need to be going into that area and bet my money on that when I have other areas that are like the retailers that are starting to come to the fore, where the energy stock, which is very under-owned, is suddenly doing a lot better. The bank stock's doing better, etc. Do I really need to go with that uncertain area or these other areas that are doing so well? And so whether they can compete or not, I don't know. I think they can, but it's going to cost some money. It's going to take some time, and that it might hurt them on the near term, even if it helps them on the long term. And for us who are looking about what stocks they're going to buy, they're looking at other areas right now.
It's very interesting. Also, we saw pretty interesting reaction when it comes to Netflix. The stock closed down about 1% yesterday, right at the opening bell. Today it's up about 0.02% in pre-market trading. So definitely Netflix under a little bit of pressure. I shall say moderate reaction of the stock. You've mentioned the energy prices. I just wanted to show everybody a very quick check on the WTI. So far it's $66 per barrel. It's off about 0.2%. The Brent at 69, kind of trying to hit the $70 per barrel target. This is really exceptional, despite the fact that right now they're slightly below the flat line. And then we have also the gold, which is trying to gain some further steam at this point at $1,865 an ounce. First of all, what's your take on the gold, and what's the percentage that we are supposed to keep in our portfolios, in your opinion, right now, considering the inflationary pressures to the upside? And secondly, of course, your take on this incredible comeback of the crude oil price.
Yeah, I'll start with crude oil. First of all, crude oil first is just that this is not only bumping up against its highs from March on crude oil and WTI, West Texas Intermediate, but that's its highs going back to 2019. So if you break above 66.30 on a closing basis, you get up into the highs towards 67. You're gonna have a meaningful break and a multi-year high. And you think about it, this group is still very, very under-owned by the institutional investors here in the U.S. and they're still holding on to these mega cap tech names. Sure, they pared some of them back, but these stocks have been dead money for all year for them. Not for longer than all year, but I mean it's weighing on their performance. And they're at some point soon. I mean, we're 5 months into the year, and they're going to have to say, "Hey, I love Apple, I love Amazon, I love." Name of Facebook, whatever it might be. It's like, I love these stocks on a long-term basis, but they're killing my performance this year. And look at these energy stocks; they're breaking out. The XLE energy ETF is breaking to a new high above its March highs. And so it's like, I've got to be moving into that group. So they're going to start paring back. And I'm not saying they're going to dump all of their Apple, but they're going to have to pare back some of that and go into the energy sector. So I think the energy sector has got huge upside here, really for the rest of the year. As for the gold, the question on gold, it's breaking out as well. It broke above its 200-day moving average, and of course with gold, then we look at gold as the everybody. It's obviously a commodity. The commodity big guys were the ones they invented technical analysis. So when you break above a key level like the 200-day moving average, that's bullish. And also we're seeing that we've seen all this near-term volatility in the cryptocurrencies, and some of the people are sitting there going, hey, I just have been completely disregarding gold for a long time now because the cryptocurrencies have been rallying so much. Well, now they're looking at them again, and it's not that you can't make money and not in one and only in gold or only in cryptocurrencies. You can make money in both, and as gold breaks out, which it is starting to do now, I think this is going to be something that can rally a lot further. I mean, gold's been around for 5,000 years. It's not going to disappear soon, and even if you are like the cryptocurrencies better, you can still use part of your money to play in the gold markets, and right now they look very good.
All right, thank you very much, Matteo Maley, Managing Director at Mirror Tobacco. Thank you for joining us, and have a great day ahead.
You too. Thank you, Alex.